Hello, traders. It's 8:03 a.m. Chicago time, 9:03 Eastern on Monday, the 5th of November, 2018. Thanks for joining me. This is the day after non-farm payroll unemployment. This day historically is pretty relatively quiet. Historically. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, really flat across the market. The sentiment is not really moving one way or another. To me, it looks like relatively even or neutral sentiment. We have gold coming off just $3.50. That's the laggard today. The Nasdaq's off 14.5 points, 0.21%. The leader today is crude. Crude popped just a few moments ago, pushed right into the edge of our stock zone there to 63.50. 63.62 is currently the high. And overall, it just seems like it's going to be a very, very quiet day. Good day to really be self-aware, as we always do as traders. So that's the overall sentiment. Looking at what's on deck for today, looks like we have at 9:45, just 15 minutes after the open, we have U.S. PMI services final. This is not the same as the prelim. For October at 54.7. ISM non-manufacturing at 10 o'clock, we're expecting 59.4 for October. And then the calendar's clear. There were some ECB speakers this morning. And that's really it. It's just really not looking so awesome today. It's looking like it's going to likely be a low volatility and quiet day. Just remember, you don't have to trade. As a trader, you're not required to trade. Your job is to pick the highest probability setups that you can come up with or find. Let the market come to you and then act according to your scenarios or plan. We come in with a plan. For those of you who haven't seen it, I posted I retweeted an article this weekend from some Navy SEALs that's by Business Insider or somebody. It's about the title of it is Navy SEALs Explain Why Overplanning Can Be Dangerous. And I found this article really awesome in that it discusses the process of planning missions. A sortie by the Navy SEALs as something that is akin to what I'm doing here with you every morning. Come in, come up with plans, do it before the storm, before you're in battle, and then that way you can execute on one of your several plans. And remember, we're not in the business of predicting where the market goes. That's not the goal of these scenarios. The goal of these scenarios is to have us be prepared so that when we engage, we're not engaging with 10 points of risk and three ticks of profit. We're engaging with the logic that was done before the market opened, because once you're trading, you're not really thinking, even though you think you are, but you're not, especially intraday. That's just a fact that I believe in. And so just find that tweet in my stream and just go through it. It's really applicable. As far as what we've got on deck for the week, get your own calendar, go find out. No, there's the key thing that is driving us this week is tomorrow's midterm elections. These elections affect governorships for states. They affect mayoral elections. They affect Congress, the House and the Senate here in the U.S. It's really important to watch how this plays out. The outcome of a midterm election historically is generally pretty random. It's pretty random with an upward skew. The other thing we need to keep an eye out for this week is the FOMC rate decision on Thursday. And we have China's CPI on Friday, among other things, PPI, University of Michigan, and so on and so forth on Friday. But throughout the week, we have some relatively important and consistent economic releases. Let's take a look at what we expected Friday versus what we got in our review segment. So the main idea for Friday was we are likely to try to push up. The expectation is we would, we were opening at 2746.75. The expectation is we'd push into 2750 or so, and then start closing this the gap beneath us into 2741.25. And the goal is the primary target is 2731.75, the point of control the prior day. The point of control, remember, I'm using volume profiling, not market profiling. The point of control is the most traded price from the prior session. Something else to remember, the point of control isn't a singular price. The point of control, or a high volume node, is really a cluster, because you never have a market that trades volume that looks like this, and then it just has, in the middle of it, it has all this volume on one price, and we call that the point of control. It doesn't work that way. Generally the market trades and it builds a high volume node, and then eventually there's a price that trades the most, and we call that the point of control. But really, you got to look at the point of control as a range of accepted prices, and again, the target. And that's why I usually draw chop around the point of control, because that's generally what happens. It is a big acceptance area, and then the extended target down would have been 2724 to 2723 beneath there. That's the primary scenario. The secondary scenario is we pull back into the 41, buyers step back in. Remember, we're coming out of, I talked on Friday morning, pre-open, that we're coming out of 2 days of balance after a gap. Watch out if it breaks higher, if it becomes initiative. There's plenty of fuel here to push it through and towards 2800. That's the secondary scenario. So we move down to 41.25 and poke in potentially into the prior range, and then we have an impulse up and we start running away, heading towards 2760 and above. Okay, so here's what actually happened. We open at 2751.25, so we open 4 points higher, putting us a little bit farther away. So all of a sudden, 2750 doesn't become the expected cap price. The next stock zone up was 2755. Here it is again. The next stock zone up, 2755, 75, 2756 basically. What happens when we open a little bit higher? We push to 5650. Okay, that's the high there, 5650. And then we become responsive. We bounce off of the prior day's high at 41.25. And then once we push in, now we're looking for 31.75. We had some really good, some really decent setups to get short, in my opinion, on the pullbacks once the break occurred to the downside. And then it's from there, we're looking for 27.24. And then what ended up happening is we ended up actually pushing through the entire 2 days of balance here to trade to the other side. We ended up finishing in the middle of the 2-day balance and putting our point of control at 27.1975 or 27.20. Remember, 27.31. 27.31 is the MC point of control in this area. It's between 27.27 and 27.31, which is where we are. This is a market currently that is completely imbalanced, and this is all following the non-farm payrolls release. So as we shift this profile forward to include Friday's action, see how it fills in. Watch that profile grow. Here's the point of control shifting up to 29 and shifting back down again, and then shifting back up again to 27.22. And currently we are completely in balance. The overnight high and low are pretty tight relative to prior sessions, 27.1275 to 27.29. The range was relatively tight when compared to the recent action overnight, and the overnight volume was relatively low. So we are opening just smack dab in the middle of this three-day balance that was formed on Wednesday on the gap up. So we filled in some of the gap. The gap mid is around 26.9750 or so. Let's pull up the gap and look at what that is doing. And my button doesn't work because we changed. Yeah. So there's a gap zone down here, and 26.9750 is the mid of it. And we almost hit it on Friday. And so we're opening completely in balance here, right up against a high volume node, not only over these last 3 days, the VPOC over the last 3 days, but also over the year. So pretty locked tight this morning. So I'm expecting very little in terms of movement today. Here's the overnight session. This is traditionally what an overnight session looks like. The volume just collapsed, 180,000 versus the 330,000 we've had recently. That tells us something. The Asian session all the way to the European Open. So the European Treasury Open is right there. The European Index Open is right there. Not much going on. We tested lower, pushed higher on the European session, and we're holding the double distribution profile from the overnight session. We're holding above the open, above Friday's close, above the mid, above VWAP, and the point of control is below us. There's not much we can glean from this overnight session other than the important fact that it just wasn't going anywhere. So this is what things look like. Now, I just don't want you to forget that there's a major event tomorrow night. I'm going to be sitting at my screen as I watch the election results. I'm also going to be right here in my office downtown at night monitoring the markets. I'm not expecting the same action as we saw on Brexit or the 2016 election where we went limit down and then rallied. Not expecting that kind of action, but I am expecting the markets to respond to whatever the results are. And we're in a holding pattern, I believe, today. And most tomorrow, we're likely to be in a holding pattern. And then we have the FOMC on Thursday behind that. So there's a lot of uncertainty ahead. And it looks like the players in here are not committing. So the big picture, this is getting a little lengthy. The big picture, there's our gap zone right there. We broke higher, and we are just forming a kind of a megaphone type of formation like that and like that. And we are in balance, and we had expanded volatility yesterday versus the Friday versus Thursday, Wednesday. But we're opening, look at where we're opening, dead center in that 3-day balance range. Okay, so just why am I emphasizing this? Why am I repeating myself over and over and over? I'm repeating myself so that you can form a narrative, so we can all form a narrative and a context of what we should expect today, and to temper our need to continue to trade the action once it has slowed down. We sit here and try to trade breakouts and whatnot. So this is the reason I'm emphasizing this point. Okay, I just want to make sure that you're fully aware of the surroundings of what's going on. So today, My expectation is chop, 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 chop. Finally break out. Look for 27.35, 36. I'm looking for that to fail. Come down, chop, chop, chop. Test below 27.15. Potentially push to 12. Chop, chop, chop. Back in the middle. Not expecting any commitment today. Non-farm payroll Monday. And elections tomorrow, FOMC Thursday. We'll get a little bit of a jarring tomorrow evening probably. And then we start to resume normal trade until Thursday, positioning until Thursday. So that's what I'm expecting. So, scenario 2, no different really. Chop, 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 chop. That starts to release to the downside. Moves into 27.15. Potentially pushes through into that 27.07, 27.08 area, impulses up, and then starts to chop its way back towards the other side. So potentially the same kind of scenario. I'd love to be wrong. I'd love to see an open test drive. I'd like to see a drive of some sort, some volatility coming back in here. But reality is it's not very likely in this market. So we'll see. My trading today is likely to be from the outside in, meaning I will be looking for order flow based indications that in my areas of interest, which are these stock zones here. In those areas of interest, I'm looking for failure by the pusher to gain ground. In other words, as it's pushing into 27.35, 36, I'm looking for the buyers to lift, but not get much in terms of price. And when that happens, you have a whole bunch of weak buyers remaining and they become sellers, and I want to get in there before they become sellers. And I'm looking for the rotation back to the open and so on and so forth. Expecting an open auction in range, and I'm expecting it again to be an outside-in trade. So fading the edges, however you want to define those, using whatever you do. I use volume profile. You might use RSI or CCI or some oscillator to find those spots. I don't know. But that's my expectation. Now, just like the Navy SEALs said, we go into, that's our main plan. Our backup is our risk plan. Our backup is the other plan as well. And we have to adapt to what the ground conditions look like. And we don't want to be those generals that just sit there and insist on the whatever it is we want to insist the conditions to be. That's not very effective. Good luck today, and I'll catch you tomorrow morning. Take care.